The Rebel Capitalist Show.
I think I saw a tweet of yours the other day, how you're
Oh, boy.
talking about maybe ag prices going
Oh, yeah.
up.
Yeah.
So can you kind of tell us where we are on the dollar milkshake theory? Kind of give us an update,
Sure.
what your views are there on the dollar. That's what most people are going to want to know right off the bat. But then kind of tell us about the nuance and the detail of that view when it comes to agriculture and maybe some other things you've been thinking through.
Sure. So you want me to start with agriculture, or you want me to start with the dollar? Where do you want me to start?
Try the dollar.
Okay. So, I think I was on here almost exactly a year ago, George. I know we've spoken a few times since then, but I remember being here a year ago, and it was we were just kind of coming out of the March crisis.
Mm-hmm.
And we were talking about how I was expecting a big bounce out of March, out of the March low, which we got. We got into June, and I thought that we would have a retest. Maybe we wouldn't go all the way back down to the March lows, but I thought we would have a retest. So we thought the dollar would come off. We thought, risk assets would rally, but then we thought we'd come back and have some kind of a retest. Well, we never got the retest. So, markets have just kind of continued to grind higher. And, what we always thought with the dollar, the reason we thought that the dollar would go higher and why we still think it would go higher is, we started thinking this long before we ever knew about the pandemic, right? We just knew the table was set for a rapidly appreciating dollar. We didn't know what the catalyst would be. And we thought that it would play out over, let's call it 3 to 4 years. So, we kind of thought 2023 to 2024 would be the latest it would play out. It could play out anytime up to there, but it could take 3 or 4 years. And we thought it would be a series of, the dollar would run, it would pull back, it would run again, it would pull back. And then when COVID hit, we incorrectly thought that COVID would accelerate everything and it would compress the time in which this happened. But that was wrong. And actually, having seen what's happened since then, it actually has deferred it. And I think it can actually push it out even farther than I initially thought, where I was originally thinking, 2023, maybe 2024. I'm now thinking 2024, maybe 2025. And
Brent, when you say it, I'm just sorry, to clarify, when you say it, for the viewers who might not understand or have heard of the dollar milkshake theory, this is when the dollar is going up to maybe 120, 130 on the DXY.
That's right. So the dollar milkshake theory is really an event-driven thesis. And we have not entered the thesis. A lot of people ask me, how's the dollar milkshake theory doing? And I said, we haven't even gotten to it yet. The thesis is how I believe markets will react and things will play out once we enter a currency crisis and a sovereign debt crisis. Now, it has taken a lot longer to get there than I thought it would. I thought that we would enter that sovereign debt crisis, currency crisis in 2020, 2021, and we still could.
Yeah, and to be clear, when you're talking about a sovereign debt crisis and currency crisis, you're not talking about the dollar. You're talking about emerging markets globally. Right.
And it's not that the dollar won't be affected, and it's not that the U.S. won't have a crisis of its own. It's just that I believe that the rest of the world will have more trouble dealing with it initially than the U.S. Right. And so that has been deferred, and it's funny when you talk macro, everything kind of relates to each other, and it's hard to tell a story with macro, because to tell a story you kind of have to talk about in a linear fashion, right? But everything's kind of interconnected, and things I'm not going to get it, chapter 1, chapter 2, chapter 3, chapter 4. I'm not going to get it right in succession. There's just no way. I've got an ego, but my ego isn't that big, right? And so but to tell a story, you kind of have to tell it linearly to get people to understand it. But chapter 4 could become chapter 2, right? And chapter 3 could end up being chapter 7. But essentially, what we think will happen is, because of all the debts in the world, and because the anemic growth in the world, and we can talk about that a little bit, we don't think that the global economy is growing at a sufficient rate to service all the global debt.
The dollar-denominated debt.
The dollar-denominated debt. Well, not just the dollar-denominated, all the debt in the world, but primarily the dollar-denominated debt. And because the dollar is the world reserve currency, and because many people owe in the dollar, that's actually demand for dollars. And so we believe that that will come back. Now, I give the central banks and the monetary authorities, all the credit in the world that they have been able. We thought that they would be able to defer it a little bit last year. We didn't think they'd be able to defer it for a year. And, maybe they can defer it for another year. I don't know for sure. But I don't think they've solved anything. I think what they have succeeded in doing is pushing it down the road. But what that did, I'm going to bring this back to commodities a little bit, is you've probably heard me say several times that I'm not on board with this global reflation theory thesis, right? Now, I'm not going to sit here and say we haven't had inflationary pressures. I get these messages and emails and DMs that says, how can you not see that inflation is here? Prices are going up. And like, of course, all you have to do is look at your screen to know that prices are going up and the dollar has come down. That's not the question. The question is whether it is sustainable or not. And I don't think that this global reflation thesis is sustainable until and unless we get a handoff from the fiscal authorities and the monetary authorities to the banks. The banks, to create sustainable, lasting inflation and global growth, you need the banks to lend. And they just simply are not doing it. I can show you chart after chart that they're not making loans. There was a huge spike a year ago in Q2 when they did the PPP loans and the government guaranteed the loans. Of course, the banks will go out and make loans when the government guarantees them. But when they have to actually put their own capital on the line and risk their own money, it's been, every quarter since last Q2 last year, it's just down, 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 down. And bank lending is not happening. And the reason this is important is, and this will get into another area of debate, but when you have securitized debt, in other words, when people borrow through bonds, or when governments borrow through bonds and issue debt and issue debt-based securities, you're just recycling money that already exists. Somebody is buying that bond with money they already have.
Right.
But when banks lend, they're actually creating new money, right? And so that's new money getting into the system. And you need new money to get into the system to get lasting inflation. Now, in the meantime, if government spends, or if they defer, if they say you don't have to make a payment, they deferred a bunch of mortgages, they deferred rent. You got preferential terms on the inventory that you owed, or the trade invoice that you owed. They can help out with the deflationary pressures by deferring that stuff, but they can't actually solve it, right? And so, but in the meantime, we have had due to COVID, we've had a number of supply chain disruptions, and that has led to prices rising in a number of commodities. And if you get a situation where supply chains are choked because trade's not happening, or ships aren't moving, or supply chains are broken, and you get that coinciding with a government stimulus plan at the same time that they don't have to pay their mortgages, right? You're going to get some temporary inflationary pressures. And so I have not been surprised at what's happening. I just don't think it can continue unless they hand that off to the banks, and the banks then start creating new money. So let's bring this back to the commodities that you talk about, and specifically the agricultural ones. I think that, again, without the banks lending, demand will fall. I don't think that we will have this sustainable global reflation and global growth. So I think industrial commodities could suffer under that scenario. But you're always going to need food, right? It doesn't matter whether you're in a recession or a depression or a boom or a high growth. You're always going to need food. People have to eat. And so those same supply chain issues have hit crops, but then also crop production in some places has been constrained a little bit due to weather or due to other factors, disease. But people need to eat. And so I'm not sure that we're going to, even if we get a big pullback in commodity prices, industrial commodities, I'm not sure we'll get a pullback or the same level of pullback in agricultural commodities.
Okay, so just keeping it in simple terms, we've got two sides of the equation when we're talking about consumer price inflation. You've got the demand side and the supply side. So right now you're saying the supply side is taking a hit. That's why you're seeing prices go up. Demand has stayed the same due to government intervention. We'll call them stimmy checks, PPP, whatever. But in the future, you see maybe more gridlock in governments. That's not going to be a reality forever. Therefore, demand comes down, and supply will come down maybe less than the rate of demand, except for in commodities, where the demand will stay consistent due to the fact that we all have to eat, but the supply chain disruption will continue because of things that take a long time to turn back around from these supply chains being disrupted in the first place, and therefore ag prices, food prices could go up. There's a high probability that they continue to go up for the let's say next 2-3 years.
Yeah, I think that's very possible. And it doesn't mean that it'll go in a straight line, but I think so. I generally, I get labeled a deflationist a lot, and I don't necessarily mind it, but I don't really consider myself a deflationist per se.
Mm-hmm.
Again, I don't mind getting that label, but I just think that I'm open to inflation happening, but certain things continuing to happen. I'll say that, to continue to go, but I just have to see certain things happen for me to make that, to take inflation. And I know everybody laughs at when the Fed says inflation is transitory. I know that gets a good chuckle. But unless I see some certain things happen, I tend to agree with them on this. And I don't agree with central banks very often, and I certainly don't like them. And I hate having to agree with them on certain occasions. But if we get inflation due to supply chain constraints, I totally get it. But if people think that we're going to have inflation because we're going to have this runaway global growth, I think it's just complete BS, for lack of a better word.